The year 2025 began with a tremor, a sense of unease rippling through the corridors of power and the bustling trading floors of the world. As the clock struck midnight, the world braced for what many feared would be a year of unprecedented economic upheaval. The foundations of the global economy, once thought unshakable, suddenly seemed fragile. Markets wavered, investors held their breath, and uncertainty became the new normal. The United States, led by President Trump, unleashed a barrage of tariff threats, signaling a dramatic escalation in trade tensions. The administration's aggressive stance sent a clear message. The era of free trade was over, and a new age of economic confrontation had begun. Shockwaves rippled through international markets, stock prices tumbled, currencies fluctuated wildly, and financial analysts scrambled to make sense of the chaos unfolding in real time. Around the globe, nations scrambled to shield their industries from the impact of steep new import duties. For many, it felt less like a policy dispute and more like a declaration of economic war, with livelihoods and national pride hanging in the balance. Headlines screamed chaos, painting a picture of a world rapidly dividing into hostile economic blocs. Old alliances were tested, and new rivalries emerged as countries rushed to secure their own interests. Container ships idled in ports, their cargoes stranded by uncertainty. From Seoul to Berlin, factory owners and managers pored over spreadsheets, calculating the mounting costs of tariffs and disrupted supply lines. The global supply chain, a delicate web connecting continents and industries, was stretched to its breaking point. Every link in the chain felt the strain as companies struggled to adapt to a rapidly changing landscape. For Canada, America's closest ally and largest trading partner, the situation was dire. Decades of carefully crafted trade policy were suddenly in question, and officials faced the daunting task of reimagining the nation's economic future. The stage was set for Canada to forge a new path. With old certainties gone, the country looked beyond its powerful southern neighbor, seeking new alliances and opportunities in a world turned upside down. A dramatic shift was underway. In the face of crisis, Canada prepared to make bold moves for economic survival, determined to chart its own course in a turbulent new era. As the economic storm raged, misleading headlines muddied the waters. Reports claimed countries buckled under U.S. pressure, slashing exports. Canada was falsely said to have secured a new trade deal with the U.S. The truth was more complex. No country agreed to cut exports. Nations like the EU and Japan engaged in intense negotiations with the U.S. They secured agreements lowering proposed tariffs, a partial victory. Claims of a massive Canadian-American trade deal were fiction. Misinformation distorted reality, obscuring Canada's economic pain. The story was about damage control and strategic pivots, not surrender. False narratives aside, the reality facing Canada was stark and undeniable. For decades, the Canadian economy had been closely intertwined with its southern neighbor, relying heavily on the United States as its primary trading partner. But as new tariffs and protectionist policies took hold, the foundation of this relationship began to crack, exposing vulnerabilities that had long been ignored. Data showed a concerning story for Canada. The numbers were not just statistics, they were a warning sign flashing red for policymakers and business leaders alike. The once steady flow of goods and services across the border was faltering, and the impact was being felt in boardrooms and factories from Vancouver to Halifax. Canadian exports to the U.S. plummeted, signaling tariffs hitting their mark. The sharp decline was more than a temporary setback. It was a wake-up call that the old ways of doing business could no longer be relied upon. The economic artery between the nations was constricting, slowing goods flow. Each day, more trucks sat idle at the border, and the once bustling highways grew quieter, a visual reminder of the shifting tides in North American trade. By April, exports fell further, contributing to a record trade deficit. The headlines grew more alarming, and the sense of urgency in Ottawa intensified as leaders realized the need for a new direction. Canada had to change course, seeking new markets in Europe and Asia. This was not just a matter of economic opportunity, but of national necessity. The search for new partners became a top priority, with trade delegations dispatched and new agreements negotiated at a rapid pace. This pivot was a necessary survival strategy, not just ambition. It was about ensuring Canada's prosperity in a world where old alliances could no longer be taken for granted. Exports to the rest of the world surged, proving diversification efforts worked. Canadian goods began reaching new shores, and industries adapted to the demands of unfamiliar markets, building resilience for the future. Canada was drawing a new economic map, declaring independence from U.S. whims. The country was no longer content to be defined by its proximity to America, but instead was forging its own path on the global stage. It was a bold declaration of economic independence, pursued with resolve and a clear vision for the future. Canada's pivot was not just a reaction but a reinvention, one that would shape its destiny for years to come. Canada didn't just absorb U.S. economic blows, it fought back. Ottawa announced retaliatory tariffs on $30 billion worth of U.S. goods. This move sent a clear message. Canada wouldn't be a passive victim. Plans to expand tariffs further served as a powerful deterrent. Canada was prepared to defend its national interests. Domestically, Canada focused on boosting internal competitiveness. A made-in-Canada approach aimed to create jobs and onshore production. Canada nurtured trade agreements with the EU and Asia-Pacific. These alliances were lifelines countering American protectionism. The trade crisis was deeply personal, shaped by leaders' agendas. President Trump initiated the conflict with broad tariffs on Canadian goods. His aggressive approach prioritized disruption over alliance stability. In Canada, Prime Minister Mark Carney stood up to Trump's agenda. Carney declared the relationship with the U.S. could never be the same. The dynamic between Trump and Carney defined the crisis trajectory. Trump projected dominance, while Carney built domestic consensus. The standoff left communication lines cold, with no resolution in sight. The economic impact was uneven, with some industries hit harder than others. What does all this drama in global trade really mean for ordinary people like you and me? It's not just a story about governments and big corporations. It's about our daily lives, our wallets, and our future. When trade tensions rise, the effects ripple outwards, touching everything from the price of groceries to the security of our jobs. For families, it can mean tighter household budgets as everyday essentials become more expensive. Workers may worry about job security, especially in industries that rely on cross-border trade or imported materials. Retaliatory tariffs on U.S. products could push up costs for Canadian consumers, making imported goods less affordable and forcing people to make tough choices at the checkout. On the other hand, Canada's pivot to domestic production could create new jobs in manufacturing and construction, but it may also mean higher costs for building infrastructure and producing goods locally. For American workers and businesses, Canadian tariffs can hurt competitiveness, making it harder to sell products abroad and putting some jobs at risk, especially in export-driven sectors. This episode is a powerful reminder that global trade is deeply interconnected. When one link in the chain is strained, the effects are felt worldwide, and there are rarely clear winners or losers. Canada's decision to shift its trade strategy signals a significant change in the established world order, challenging old alliances and prompting new questions about the future. As other nations watch closely, some may follow Canada's lead, strengthening regional trade blocs and forging new partnerships to protect their own interests. The result could be a more multipolar global economy, where influence and opportunity are distributed among several regions, rather than dominated by a single power. For individuals, this means navigating a world of shifting economic certainties. Staying informed, adaptable, and open to new opportunities will be key to thriving in this evolving landscape.